Good afternoon, MMTs. Here we are on the NASDAQ comp. Um, Once again, the long-term uptrend of this 50-week moving average and the 200-day simple moving average has held support. And I will pull that up right here on a daily to let you know that when you look at a daily where we call the top here, and the NASDAQ comp and the technology sector and internet stocks had led this down, and we got below the 200-day simple moving average. Well, during this last, when we got down here, when we got back above here, we got above these daily moving averages. That's brought buyers back in. The NASDAQ is acting better than any other of the indexes. This is the one that let us down. But when you look at it on a daily perspective, you can see the amount of buyers, and you can see the key long-term moving average trends had held during the correction, and we did not break below them. We also said it was a short-term oversold market that would have rallies, that stocks like Google, stocks like Sinus, stocks like Baidu, stocks like Amazon, Priceline, Netflix, and a whole bunch of them, stocks like Apple that hit 310, that those were going to be where they were sold out and that you would move higher, and we have done just that. Now, this is the daily bullishness part of it. We're still in a long-term daily sell signal. However, the percent DS has been rising up here. We're not in a daily buy signal. There's going to be some challenges up here at this upper trend line. This is the lower neckline right here where the bulk of that 2741, which we're above it, we're slightly hitting and knocking on this door right here. That's what that looks like as far as the daily goes. Now, more importantly is the NASDAQ comp led this correction down. Here's where we were oversold. That long-term 50-week moving average. It's all on stockmarketfunding.com. And that the top that we called the reversal, that we would have a short-term market reversal. It's at the end of the 3-month quarter where the buyers have stepped in, the grease deal is out of the way, everybody is feeling good, but the problem is that the weekly moving averages are still pointing down. Yes, the weekly percent DS standard technical analysis is pointing up, as they should with turns. This is where we have the couple of weeks up, but I can tell you, the blue line is a 10-week and the red line is a 20-week. Until we have a closing price above it, we will remain in trading range volatility. We have the earnings season coming up, Independence Day, July 4th. We have the holiday weekend coming up. The key is that once the buyers have came in and bought at the end of the quarter here, this is a good weekly reversal. This is going to be where the bottoms were put in. And when bottoms are put in, they're going to have to get this a consolidation above the weekly moving averages to say that we're happy about it, meaning that they're all tradable for shorter term ranges. But risk still remains until this diagonal trend line right here is where we're above it and its support, and it's above the weekly moving averages. The other thing that I would like to say is that when you take a look at the longer term trend structure, is that if I draw a diagonal trend line off the 2009 lows and I come all the way back up here, when we had the correction, and we always tell people a correction's a correction, this was a pretty good one. It was a second correction of 2011, but this long upward trend line held at support, and people came in and bought the move. So we know where that trend line came from, and we can see how we're bounced off of there. But once again, the stock that led this move down did it. The index, technology sectors, everything let it down. So we will be monitoring the actual downtrend, and we will use the SMF trend analyzer to actually come up with the weighting of this reversal from the short down to this bottom up, and we're going to find out where the trend really is. Is it medium trend? It looks like it's still in a severe downtrend. Maybe it looks like that on the chart, but we have a system that tells us where the real trend is. Okay? And the thing about it is, until we are closing above there, these weekly moving averages are descending. The weekly percent DS line has turned as it should at any market turn. But once again, to say that we're going to break that total downtrend, there's a lot of work to do above the weekly moving averages. We'll find out what the earnings season brings us. We'll find out what the U.S. prosperity plan brings us. We will find out that the buyer and the seller, where is the buyer once the quarterly end buying is out of the way? Who is going to be here to keep these things moving? We have to close above here to break this downtrend on the NASDAQ comp. And until it does that and consolidates that and these moving averages, weekly moving averages, flatten out and start to turn up, all this was a tradable reversal bottom that we said was short-term oversold. We highlighted all of those stocks on the SMF site, taught all of the MMT students how to get these bounces, and that they're tradable bounces when you're near-term oversold, that you want to know that the shorts had to come out and the shorts had to cover, and that fueled our upside move into resistance. That's the NASDAQ comp using the weekly chart and understanding that this is all standard technical analysis. It's not what we teach the MMTs, it's what the public makes decisions on, and that's how we make our decisions as to what they're doing there. So basically, we're consolidating a nice short-term oversold market into the resistance area. The key will be when July 11th comes around and corporate profits come around and earnings come around, is what these markets are made of. Volatility will remain extremely high elevated levels.